the argument has shifted basically from whether inflation is rising and will it hit your goal to how far above your goal do you let it go. What would you be comfortable with?
So we didn't overreact when inflation was below our goal. I don't think it's right for us to overreact when inflation goes a bit above our goal. We're always aiming to keep inflation about at our 2% goal. And so I'm comfortable with inflation moving a little bit above 2%. But again, it's got to be in the medium run forecast coming back down to 2%.
Well, I mean, these guys out there on the trading desks are all wondering, what does she mean a little bit? I mean, 2.5% for how long?
It really depends on the forecast, right? I mean, I wouldn't be comfortable if I saw a forecast that had, inflation moving up and continuing to move up above 2%. If I saw it move up temporarily, but my forecast and most economists' forecasts were it to come back down to 2% over that medium run forecast time horizon over which monetary policy can affect the economy, then I'd be comfortable.
And the other question everybody wants to know is, if inflation is moving up, when do I get a raise? Because right now, consumer price inflation is running above average hourly earnings.
Right. So if you look at the ECI data, which is one of the indicators of wage inflation, you have seen it accelerate from where it was earlier in the expansion, which is a good thing. And if you look at the disaggregated, you see it's the lower end of wages that are moving up. So I think that's a very good thing. I think a lot of what's going on in the wage picture has to do with low productivity growth. So investment being up can increase productivity growth. I think that's a good thing. I think the other aspect, of course, is that inflation has been low over for most of the expansion, and that also explains the low levels of wage growth.